Time now for a look at the day's top business news. Brian Quinn is with us for that. Brian, we're going to start with a new development in legal actions surrounding America's deadly opioid addiction crisis.
That's right. Eve Monday, of course, brought a $572 million judgment against U.S. drug maker Johnson & Johnson in the state of Oklahoma for its role in promoting addictive painkillers. Well, now Purdue Pharma is reportedly seeking to settle thousands of lawsuits it's currently facing with an offer of $10 to $12 billion. Purdue's signature drug OxyContin has been central to the opioid crisis in the U.S. The company is one of over 20 firms named in some 2,000 cases that are set for trial in October. New York Times reports that Purdue's owners, the Sackler family, would relinquish their ownership of the company and pay $3 billion of their own money as part of that settlement.
Okay, interesting development there, Brian. Well, the pharmaceutical industry's response to the opioid crisis often compared to that of the tobacco industry back in the 1990s. Now, two tobacco giants are considering joining forces a decade after they split from one another.
That's right. Philip Morris International and Altria Group are in talks to reunite via an all-stock merger. The move would rejoin two of the world's largest tobacco companies in a bid to dominate the fast-growing electronic cigarette market. Wasim Cornet explains.
It's a potential deal that would create a tobacco powerhouse. Philip Morris International and Altria Group are currently in talks to merge, discussions which could lead to the creation of a vast business. The two companies hope to dominate the e-cigarette market, a necessary adjustment as sales of their traditional tobacco products go up in smoke. Last year, cigarette sales were down 4.5% around the world, a stark contrast to the e-cigarette market, which is expected to grow 8% over the next 5 years. The companies had formed one giant conglomerate in the past before they separated. Altria and Philip Morris still produce the Marlboro brand in the U.S. and around the world, respectively. Now they hope to dominate the industry once again. The two businesses reported combined sales of nearly $50 billion last year. But the road ahead could be difficult. The CEO of Philip Morris has publicly criticized Altria for fueling a vaping epidemic. Altria owns a third of Juul, which has taken the American e-cigarette market by storm. In the meantime, both companies have invested heavily in tobacco alternatives, with Altria recently taking a 45% stake in a Canadian cannabis group.
The company's keen on that merger idea. However, investors not so much.
Doesn't look like it. Philip Morris shares have lost nearly 8%. Altria shares down nearly 4%. As its shareholders balk at the lack of premium for their stakes in that deal. Elsewhere on the markets, Asian indexes were mixed on Wednesday as investors watch a worsening inversion of the bond yield curve in the U.S. That's a key warning sign of looming recession. Tokyo's Nikkei and the Kospi in Seoul closing in the green, but Chinese indexes losing some ground as the U.S.-China trade spat drags on. Here in Europe, major indexes opened in the red as those bond market signs send investors running for the exits. London's FTSE 100 down just around 0.1%, but the CAC 40 here in Paris and the DAX down over 0.33% each.
And continuing on that positive note, Brian, French businesses have had a bit of a rough ride in 2019, especially amid the yellow vest anti-government movement. But it looks like Paris's tourism industry may have actually got out unscathed.
That's right. The French Tourism Board has released its numbers for the first half of 2019, showing stable figures here in the capital. While there was a dip in foreign visitors to Paris at the height of the yellow vest movement, it was made up for by an uptick in French visitors. Solange Moujan has the details.
The beauty of a boat ride down the Seine. So far this year, even during the Yellow Vest movement, tourists have been as enamored as ever by Paris.
It's a romantic city, counting the words.
A lot of history, and so you get a lot of stories different from where we come from.
More than 10 million people made the trip to the Louvre last year, and its popularity is showing no signs of ebbing. So the museum, which is the most visited in the world, is now considering making reservations mandatory. The tourism board for the Paris region said that even with the Yellow Vest movement, their first semester numbers remain steady. The half-point drop in foreign tourists was nearly made up by French visitors. Over 17 million hotel rooms were booked, meeting last year's records, and bringing in nearly 10 billion euros from January to June. But for some hotels along the Champs-Élysées, there was a weekend dip earlier this year because of the Saturday protests.
Starting Friday, the hotel would empty out and begin to refill on Mondays.
Some neighborhoods and museums, though, actually felt an uptick because of the Yellow Vest movement.
Museums in the Champs-Élysées area suffered, but the ones farther out essentially picked up those tourists who couldn't visit the central areas. So Montmartre did, at a certain period, benefit from the Yellow Vest movement.
Among foreigners, Americans still hold the top spot for the number of tourists visiting the City of Light, followed by British and Spanish visitors.
And that wraps it up for the business news. Thanks a lot to Brian Quinn for that.